Hello, this is Paul Mampilly for the Profits Unlimited YouTube channel. And in this video, I'm going to answer a question that I recently received from some of my subscribers. And readers wrote in to ask me, when are you going to sell the stocks that have gone up a lot? And aren't you afraid that these stocks are going to lose their gains? So let me start by saying that the first thing that we want when we invest in a stock is we want the stocks to go up. And from all my experience in being on Wall Street, my experience is that the stocks that are already up are the ones that are most likely to keep going up. And so as much as it makes you nervous to hold on to stocks that have gains, those are generally the very same stocks that are going to continue to go up. And the reason for that is usually because there's something going on in their business, which is it's growing, and it's growing in a significant way. And for many of the stocks in Profits Unlimited, for example, they're participating in the Internet of Things megatrend. And this is a very large, huge megatrend that I'm expecting to continue for a very long period of time. So selling stocks when their businesses are growing and continue to grow is generally a bad idea, because the same stock that has gone up 20% is the one that can get you 50% gains. And the one that can get you 50% gains is the one that can get you 100% gains. So that's the first reason why I'm not selling the stocks that have gone up a lot, because I track business growth. The second thing that I would tell you is that if you're tracking business growth, the news that the company gives you about the stocks, which generally happens on a 3-month basis when they issue their quarterly releases, those are the triggers to tell me when to sell a stock. It's by tracking what's going on in the business and business growth. Now, there's a second reason why we would sell a stock, and that's related to the overall market, which is that you can arrive at a point in time like we came to in 1999, when so many people were in the stock market, and so many of these people had no idea how to evaluate what the price of a stock should be, how to evaluate a business, and that was a bubble. In other words, all the people that were ever likely to buy all those stocks were completely in. Many of them had borrowed money to buy those stocks, and they're willing to pay virtually any price to be in the stock. That's the essence of an overvalued market, a bubble market. And what you tend to find is that those markets don't immediately crash. There's a period of usually at least 3 months, oftentimes even longer. It can last as long as 1 to 2 years, where these markets are sort of in this like very volatile trend where people are coming in and they're buying. However, it can't push the market up very much. And once again, we go back to this idea, which is that the reason to be in stocks is because we want those stock prices to go up. And in a regular market where things are going well, you'll see that happening as new investors come in, they push stock prices higher. When you're in a peaking market, you won't see that. Instead, you see markets in a trend, the stocks that you own in a trend, and generally speaking, you'll also find that the companies are beginning to tell you that their business growth is stagnating, it's ending, and you'll see multiple triggers to sell. So that's my answer to my readers' questions for this week. If you like this video, please subscribe to the video, give it a thumbs up, and share it with your friends and family. This is Paul Mampilly for the Profits Unlimited YouTube channel.